All right, I want to take a look at the metals. Today, we're getting the second scenario that I covered in my last report, and that was that um, price might break through the trend line and the 200-day moving average on the first attempt, catch the bullion banks in their shorts, and trigger a short squeeze. It wasn't really my preferred um, scenario that I thought was going to play out, but it doesn't matter. The end result is still going to be the same. And this actually becomes a little bit more dangerous for retail, emotional, dumb money type traders. And the reason I say that is these people are now going to get really bullish. They're going to slap on a bunch of leverage, and the problem is that we're getting really, really late in this daily cycle. Um, this is day 32, if I remember correctly. So when it gets this late in the daily cycle, you're playing musical chairs, and you're betting that you are going to be able to call the top, and you can get out of your leverage at the top. Now, granted, mind you, I'm not trying to call the top of the intermediate cycle by any means. I think we've got one or two more daily cycles ahead of us before that tops, but we are getting really mature in this daily cycle. So um, at some point here, um, we're going to get a top in this daily cycle, and then we're going to get a move down, and it will be scary. I've noted this more times than I can remember, that the markets move like a pendulum. So the further the pendulum swings to one side, the further it's going to swing in the other direction. So the more bullish and excited people get as we get later and later in this daily cycle, the more people that buy late, that chase this move late, that's more people to get stopped out when we start the corrective move back down into the daily cycle low. So my suggestion was and continues to be, if you've ridden most of this up, especially if you've ridden it in leverage, now's the time to take off leverage. The place to take it off was right here at the 200-day moving average, just in case the bullion banks were successful to turn this back down. But it doesn't matter whether they succeeded or not. Yet the strategy remains the same. It's late in the daily cycle. You want to take your leverage down now, go to unleveraged positions, and then wait until we get the move down into the daily cycle low. And then that's where you want to put your positions back on. So, I have no idea where the top of this daily cycle is going to come. We've got a resistance zone right in here. We've got one at 1900. Very often cycles in metals will top a little short of a target, so 1900 would be a potential target. They may catch traders um, holding long a little too long if this daily cycle tops slightly before we get to 1900. But either way, we're going to get a daily cycle top, and then I'm going to show you what's going to happen. All right, so as I said, at some point here, we're going to get a daily cycle top. And then when we do, price is going to come down. It's going to go below this 10-day moving average. It's going to hold below that 10-day moving average long enough to turn this moving average back down. Price is going to break this cycle uptrend line. And usually, um, a daily cycle low will, or any cycle low really, will retrace a minimum back to the 38% retracement. All right, so if gold were to top today, then a minimum retracement during the daily cycle low would be back below 1800. If we go a little higher, if we go to 1900, that would be a little higher, but you still get the picture here. Once that correction starts, it's going to be, significant, and a 50% retracement is not at all unusual. We could, no matter where we top here, anywhere between here and I would say 1950-ish, this resistance zone here would be probably the most bullish upside target we could um, expect. Have my doubts it's going to go that far, but if it does, it's not at all impossible for a retracement from even from 1950 all the way back down to 1850, back down to this consolidation zone here, or if we top sooner than that, but maybe back down to this consolidation. And then everybody is going to be 180 degrees bearish, completely opposite to what they are today. Today, all they can see is blue skies ahead, and there's no thought of any possible correction. Just like down here, there was no one thought there was any possible way that metals could rally. And now, a month or so later, look where we are. So the same thing holds. This late in a daily cycle, you want to be careful because we're at risk of forming that daily cycle top and then getting the correction. During the correction, RSI is going to come back down here to oversold, just like it did here, and then that will be your buying opportunity. So you don't need to ride these last few days of the daily cycle in leverage, betting that you are going to be able to spot the exact top. You aren't. You aren't going to be able to spot the exact top, and you almost certainly will hold too long, and then you'll get caught on the move down, and you'll get caught in your leverage, and you'll give back a really big chunk of the gains you've made. So the correct strategy is this late in a daily cycle, you deleverage, and then you wait. You wait for the daily cycle low to come. You wait for the parameters to be met. We've got to go below and turn the 10-day moving average back down. We got to break that cycle trend line, and we got to push this RSI back down to oversold. When those parameters are met, then you start looking for a daily cycle low, and that's where you want to put your leverage back on. At that point, you've got anywhere from 20 to 30 days ahead of you for the market to rally. Just like right here at the cycle bottom, this was the spot to put your leverage on because you had 20 to 30, and in our case, we're at 32 days right now anyway, of rally ahead. So your potential was a lot more. Whereas right now, your emotions tell you that you're missing the move, and you really aren't. Like I said, we're gonna have a correction. We're gonna push this RSI back down to 5, or the 5-day RSI back down to oversold, and then that is your buying opportunity. So you don't have to make a dumb money mistake and chase late into a daily cycle thinking that you're missing the move. If you weren't long here, then yeah, you missed the move, but you don't need to chase here. You're going to get another daily cycle low here soon. 5-day RSI will get oversold, and then that's going to be your buying opportunity. For now, you need to ride out these last few days in an unleveraged position so that when the top comes and we start down into the daily cycle low, you don't give back a huge chunk of the gains that you made during this part, assuming that you were smart enough to pull the trigger down here when we got our swing, and when I told everybody that we had bottomed, and that all of the analysts that were negative, I kept telling people that these people were too negative on the metals, and that we were going higher, and I stand by my statement. The real momentum is going to come in the next daily cycle in June and July. We got to find a top here to this daily cycle. We've got to get our correction down into the daily cycle low, and it's the next daily cycle that is going to produce the real big momentum, much more than what we got during this rally right here. So you want to make sure you catch that next daily cycle. You don't need to chase right now. This is not where the big momentum move is going to occur. It's going to be during the next daily cycle in June and July.